And for commodities market update, Maiwa Ige joins us now. Thank you for joining us.
Thank you for having me.
Good morning.
Good morning.
Yeah.
Thank you for having me.
So we just had a conversation about the issue of maize, and now there's going to be a commodity exchange. How will this impact the commodities market?
So a commodity exchange is basically the most perfect and efficient market system.
Okay.
And then when you look at it, it's and when you what is a perfect market? What are the characteristics? It just basically means a market setting where you sell standardized products. There's a quality, minimum quality. You have many buyers, many sellers. You have free entry, free exit, and then it gives an opportunity to set reasonable prices, and there's a lot of transparency in the market. So it's common in other countries around the world. You have the Chicago Board of Trade in the US, you have the New York Mercantile Exchange, and even in India, you have the MCX in India. So bringing it to Nigeria, it's something that would actually be beneficial to us. It would be beneficial to us generally when you bring it to Nigeria to help our agricultural production, in the sense that farmers know that there's an avenue where they can sell their products. There are traders, there are buyers. You have big companies that have easy access to our produce. And then if you look at Nigeria in particular, you notice that a lot of our farmers are small-scale farmers, and they do not have the leverage to sell what they actually produce. So with this exchange, there's a platform where you have traders that can buy from them. You have warehouses where they can store their produce, and then it's like spot buying. You have the manufacturers that need the raw materials. They buy maybe 500 tons on the spot. The farmers,
like Guinness, Nigerian breweries,
yes, and they bring it on the spot, and then they buy it on the spot. And with this, there's no wastage. The farmers keeping things in. They don't even have good storage facilities, to be honest. So that wastage is reduced. Like in Nigeria now, farmers, about 40% of what our farmers produce are wasted. And then so when that is taken out, you have more supply of agricultural products. Then farmers are incentivized to even produce more. And they would actually see a drop in commodity prices generally. And this would feed into inflation. It will help our inflation because we have higher supply of produce. We have transparent pricing generally, so it would even help individuals in terms of commodity prices.
Okay. Okay, another burning issue there. Of course, yesterday we saw FBN Quest PMI come out and not really looking very good, crashing 19% to 44.5%. That's the lowest, in many months. Now, of course, we've seen some kind of optimism there from the government that Nigeria will exit recession this year. So, but with the PMI numbers that we are seeing now, even though we have not seen that of the central bank, what we're seeing now, are we likely to witness this positive growth this year?
So, most likely not. Very probably not going to see, because the PMI is a leading indicator, right? So when we look at it, generally in the start of the year, January, we usually see a drop in the PMI because there's been a festive period, economic activities were reduced, and then so all that will feed into what we see in January, and then as economic activities pick up, we'll see a pickup in the PMI. And so that's also what has happened. But now the number you have called is about 44.5, which is lower than 50, meaning we're in the contraction region right now. So that is showing that the GDP growth is going to be negative, really. And then looking at FBN's PMI, the reasons for this, we have this high scarcity and high cost of raw materials. You have a delay in resumption of economic activities, and all of this. And the FX charges, that also feeds into the scarcity. One of the reasons why we also have there's this forex shortage, and manufacturers are actually a major part of people that have been affected by this, and this is affecting their own business. So there's that. So that's the general thing that usually happens. Now, when we now look at COVID-19, it's added its own impact in this, which has led to the further reduction from what we would have seen in previous years. And so all of these, with all of these indications, we do not think that we would see a growth in this first quarter. And now second quarter, we do not know. But for now, the signals are not quite positive. So we most likely wouldn't see a positive growth in the Q1.
Anyway, looking at the oil markets now, OPEC has maintained an extraordinary level of output discipline, which has pushed the price of Brent above $55 per barrel. Do you think that this is actually sustainable?
Well, to an extent, probably not. The reason for this, you look at OPEC, Saudi Arabia being the market leader or big brother in this case, if we call it, Saudi reduced their output this year, and they've also hinted that they would actually reduce further by about 1 million barrels in February and March, and then so this would help reduce production output and then increase prices, especially when you consider that other oil-producing countries cannot, most of them are not exactly psyched to reduce their output because of their own respective economic challenges as a result of COVID-19 and everything. So Saudi Arabia rather, is taking the lead in trying to maintain a balance. And then you also have Russia and Kazakhstan that have also been given a license to increase their oil production. So they're trying to create a balance in that regard. But then there are also concerns about the resurgence of the COVID-19. You've seen the new variants, and there are also concerns as to the rollout of the vaccine, accessibility, especially in other countries. Like, for instance, Nigeria is a major oil producer. We know that accessibility to the vaccine would be a bit of an issue for us. So that's also a concern generally. And then how it's going to impact demand, global demand for oil. It may actually lead to a reduction in demand, which would impact prices. So that's a major challenge that has led to an uncertainty, which we cannot particularly say that the prices this will be sustainable, because that's a major uncertainty that's going to affect the price of crude oil going
so
forward.
what will this do to the Nigerian budget fiscal deficit? So
for Nigeria, apart from the price, we know our budget currently, we have petroleum price pegged at about $40 per barrel for our budget. And now petroleum is trading at over about $55 per barrel. So yes, you could say, oh, it should be beneficial to us. But Nigeria has a particular challenge. Our production has actually dropped by, I think, about 50,000 barrels per day, which is a particular problem peculiar to us. You have, I think there's an issue at Kwa Ibo facility. So we have to, that is a major challenge. So even if the price increases, if that is not sorted, we might not benefit so much from it. But yeah, if you say with higher price petroleum crude oil prices, Nigeria would be able to fund her budget better. But then there are also other challenges that would go to the common man as a result of
like
an increase in
PMS.
Increase in the price of PMS, and how it would also flow to
the commodity prices.
Okay, so the price of rice usually falls in January as consumers use their disposable income to meet their school fees, bills, and other necessities. Because of these supply shortages, how would this impact the import restrictions?
Well, rice has actually declined a bit, right, by about 9%.
Yeah.
But then, when we look at it, there's still a restriction on the price of rice. There's still a restriction on the price of rice. So even with there's a limit to how low the prices can drop. And then if there's smuggling, we still know that there's smuggling, right? But then there's tighter control at the borders, so the level of smuggling has reduced. It's not as rampant as it used to be. So there's a limit to how much supply that's in the market. And then there's also been challenges surrounding rice production generally in the past year that have affected our harvest, our output. So even with the reduction in demand and all of that, it's still the limit to the decline in rice prices is a bit capped. It can't go a bit further than it currently is.
Okay. And then looking at the global price of palm oil, that has fallen as well. And of course, the opposite is the case here in Nigeria. So we've seen price increase by 5% to 20,000 naira. So Why is the Nigerian price moving in the opposite direction of the global trend?
So the decline in palm oil prices happened as a result of the pandemic. But as at Q3, palm oil prices have actually started picking up. And then we know that crude palm oil is also an important raw material for palm oil production in Nigeria. So with the increase in price of crude oil palm oil in recent times, it's also impacted our price of palm oil in Nigeria. And there's also a limit to the supply. The border has been opened, right? But still, there's a limit to how much palm oil is being brought into the country. So there's also a shortage of supply. And currently in Nigeria, this is the planting season of palm oil. It's not the harvest season. So generally also, there's a shortage of supply. And also when we go back to logistics, palm oil is majorly produced in the east. And then we know that in Nigeria currently there's insecurity on the roads. And
there's transportation issues.
All of this is put into the logistics cost, and it goes back to the consumer in terms of higher prices. So all of these have affected the prices of palm oil in particular in Nigeria.
Okay, so we've seen Okomu and Presco, of course, they are reporting healthy profits and their stock prices have soared this quarter. Could it be, because of this contrarian movement that you have, talked about, that we're seeing that trend in some of these stocks?
Palm oil, well, they are dealing with palm oil. Palm oil is a very, it's in high demand. So it's a commodity that's used by everyone. Even now, when you look at the COVID-19 pandemic, you're advised to always wash your hands. Palm oil is used to make soaps. So it's in high demand. It's always in high demand. So they are dealing with a commodity that the demand is always high. So even when there's a shortage of supply, they have high demand. And then there was the border closure that was just reversed quite recently. So they have benefited from that border closure a lot. Then the constant demand for palm oil has been beneficial to them. And also, so for instance, Presco, for instance, has had some very interesting strategies, expansionary strategies, backward integration that has been beneficial to them even especially during this COVID-19 pandemic. So all of these have helped to improve their performance, their sales. But also, both companies also have particular issues as related to their cost. They have some cost pressures, high admin costs, that it's also affecting their profit after tax, and also that is also a problem there. But that is an internal problem. It's not it doesn't affect their sale per se. But generally, because they are dealing with a commodity that is in high demand, they're definitely doing well.
Well, we know that this is a pretty new week, and looking at this trend in the domestic commodity space and, of course, the global commodity space, both oil and the agri-commodity, what is the outlook for the rest of the week?
For the rest of the week, we have planting season going to kick off very soon. So we expect to see some commodities would rise. Then if we look at some global commodities like wheat, we expect to see prices increase because Russia still has some export levies on wheat. And then we have corn. There's a higher demand for corn, so we expect prices to go up because I think China needs it for ethanol production. We also have sugar. We still have, I think, challenges with the weather conditions in Brazil.
Talking about corn, so if we have the potential of producing this maize and then China needs it for ethanol, why can't we produce it?
Yeah.
So we can actually produce it, and we produce it. But the problem still goes back to our production challenges. Like when I mentioned earlier when we spoke about the commodity exchange, that we have a lot in Nigeria, a lot of our farmers are small-scale farmers. There's a limit to how much they can produce. And then we do not have a lot of the value chain, should I say, agricultural value chain in Nigeria is not so developed. And this would actually affect them. So and then when you say they're small-scale farmers, they use we say they're subsistent farmers. There's a level of there's a limit to how much they can actually produce. So and then they have fertilizers is one of the ban lists. For you to grow anything, you need fertilizers. Then quality is also a factor. You need quality. You how they say computer language, garbage in, garbage out. You need to be able to put quality seedlings into the ground to get quality produce. So all of these, Nigeria is not just peculiar to corn. I say to most agricultural commodities. It's the challenge, agricultural challenges in Nigeria, lack of credit. They say they have credit facilities, but the interest rates are not. The interest rate is too high for a small-scale farmer. You have infrastructural challenges and so many things really affecting agricultural production in Nigeria.
All right, thank you very much, Maiwa, for your time. So we'll look forward to seeing you on Thursday, I guess.
Yes.